Good morning friends and welcome to the pre-market view. We have an important event budget today, so there is going to be the entire focus of the market on the budget proposals and possible sectors or stocks where we can expect some kind of an action on the back of those proposals. So I will take you through the important expectations that the market has from this budget somewhere later. But to start with, the global markets were positive. Yesterday we had seen some kind of a pullback in both the Dow and Nasdaq, anywhere from 0.5 to about 0.65%. European markets too were up anywhere from 0.4 to almost about 0.75%. And when we look at the Asian markets today morning, Nikkei is down about 0.25%. However, Hang Seng is up about 0.25%, and SGX Nifty suggesting that we are going to open up about 12 to 15 points, somewhere around 7600 levels. In terms of flows, friends, yesterday FIs were net buyers in the cash market to the tune of about 660 odd crore. The domestic institutions were sellers to the tune of about 245 crore. And in the index futures, we have seen the FIs selling to the tune of about 650 odd crore. Typically on a budget day, the intraday movement in the index, that is Nifty and Sensex, is anywhere from about 3 to 4%. And since we have seen some kind of pull off ahead of the budget, it means that the market is a bit cautious. But still, the fact of the matter is that we've seen a huge spike in the market in the last about 2 months. The expectations are running high. So be prepared to see some volatility in today's market, in index as well as in certain pockets, particularly the mid-cap basket, which has run up quite a bit. On that note, let me invite Sadhana to take us through important FAQs and ideas that we can have from the F&O desk.
Good morning friends, let's have a view on derivatives. From past 2 days we have seen that markets continue to trade in a negative terrain. Yesterday also we have seen that after making an intraday high at around 7670, market started falling and reached the psychological mark of 7600 and hit a fresh intraday low at around 7567 odd levels. Due to heavy selling pressure was visible in many of the blue chip counters along with sectoral indices, and Nifty finally snapped its session with a marginal loss of 0.66%. In this period, we have seen that long unwinding was taking place by market participants for second day in a row, as around marginal shares, approximately 22,000 shares were reduced in open interest, and Nifty future price also decreased by approximately 0.66%. Along with cost of carry decreased by 43% from 5.32 to 2.99, and Nifty futures view also decreased from 25 points to 13 odd levels. On the options front, PCR is at same level 0.72, but we have seen that call option has seen good activity as compared to put option. In yesterday's trade, call option has added around 33 lakh shares in open interest, which is we can discuss in options activity. India VIX also is down by 5% from 19.18 and 18 to 18.19. Ahead of event, IB should be up, but it is continuously down from 2 to 3 consecutive days, which can be considered as a positive sign for the market. In the options activity, we have seen that 8,000 call option still stands with highest number of shares in open interest, followed by 7,800 and 7,700. Yesterday, 7,700 was most active option in the call strikes. And put option, we have seen that 7,500 has reduced its shares in open interest, and that activity shifted to 7,300 put option and 7,000 put option. Both of them currently stands with highest number of shares in open interest in yesterday's trade. There are 3 securities in ban period today. One is GMR Infra, second is India Real Estate, and third is Unity. Yesterday, FIs were net sellers of approximately 1300 odd crores in future and option segment. Mainly, there were net sellers of 662 crores in index futures. There were net sellers of 1055 crore in index options. There were net buyers of 457 crore in stock futures, and there were net buyers of 27 crores in stock options. Our 5 days EVM stands at 7,700. Lower range for the market would be 7,500 and higher range would be 7,700. Singapore Nifty is up by 23 points, which is at 7615. We may see marginal flattish to positive start in Nifty futures today, but ahead of a very big event, that is Union Budget, we may see very intraday whipsaws and volatility in the market today. That's it from derivatives. Thank you.
Friends, let me take you through the Sharekhan pre-market action, starting with actionable ideas. Bharti, there are some positive news. as a company would be selling about 3,100 telecom towers in the 4 African countries to Helios Towers of Africa. So this is definitely a positive trigger for Bharti. So one can go long there with a stop loss of about 340 rupees and a target of about 350 to about 355. Now coming to the important budget proposals that one can expect are the roadmap to address the fiscal imbalance. Currently the line for the fiscal deficit was pegged at about 4.1%, but there are fillers that probably we will not be able to achieve that limit, and it might extend to about 4.3 to 4.4%. We've heard the finance minister in the past few days, and he has definitely emphasized upon the importance of maintaining this FRBM Act deadline. But given the fact that there is going to be a delay in the monsoon, the tax collection may not be up to the mark. This might stretch up to 4.3 to 4.4%. And also the market is watching out for some measures to revive the growth and the curtail inflation in spite of the weak monsoon. And there is going to be some expectation on the timeline for the rollout of GST and other critical reforms. Also in other tax proposals, the market is expecting some kind of benefits under Section 80IA and the reduction of the MAT, some kind of a tax incentive for the low-cost housing and SEZ projects, and also increase in the tax exemption limit under Section 80C, whereby you get additional tax benefit to the tune of about 50,000 to about 1 lakh kind of an investment, and some kind of tax soaps for textiles and some of the large employment generating manufacturing sectors. So these are the key expectations. Now, which are the stocks that we should be watching out for in this budget? Arvind Mills, there is definitely an expectation of some kind of soaps or incentives for the textile sector. Bharat Electronics, because of the kind of increase in the allocation towards defense and also higher indigenization. CMC, we have already seen this stock run up because of the higher spend on the technology, etc. Cox and Kings, because of the higher emphasis that this government may have towards tourism sector. Fortis Healthcare, because of the healthcare overall higher budgetary allocation. Gateway District Park, because if there is an imposition of some kind of a plan for the logistics companies and the rollout of GST, etc., then Gateway District Park could be a big beneficiary. Jain Irrigation, because of the focus on agriculture, etc. Titan, because there are expectations that the import duty may be cut, and overall if there is increase in the disposable spending, then Titan will be the beneficiary of that. Vatek Vabak, because of the kind of presence it has across the value chain on the water segment, this looks to be a good bet. At LIC Housing, because of the kind of valuations, and of course if there is some kind of thrust on the housing sector, particularly low cost housing, then LIC Housing could be a beneficiary of that. So these are the stocks that we shall be watching out for. And in other news, friends, there are reports that Subex could be an acquisition candidate by some of the global PE majors. So watch out for some action in Subex in today's market. That's it from all of us, friends. Have a great trading session and see you tomorrow at the same time.